think. Hey there, this is Bob from Trade Genius, 24th of April. And today we got the expected bounce from the fake panic from the election that everybody knew it was going to happen with. And it was just an excuse. We had elevated VIX, we had elevated yen, and they were just looking for an excuse to jam the shorts because that's all they have left. The magnitude was way more than I thought. But we were short volatility, we were short metals, we were short miners, and we were long oil. And, oil right before the market opened was up. Should have took profit, didn't. But the UCO position that we had, we don't sell pre-market anyway. And by then the day was baked, so we stayed with oil. But the metals, miners, and volatility trades were beautiful. In fact, we even got another volatility short trade in as a day trade on top of it. So where to? Let's go into it and see what's going on. Is that if you see here on SPY, we touched the top of this channel that we started with. We had a touch point here and a touch point here, and now we had our third touch point here. We gapped up into it, and now the question is, and there's three scenarios here. So we go back into the channel and hit VWAP and hit that 100-day moving average. We can go to a double top, or we can blow off. And right now, if you just look at the charts, you have to say potential consolidation day tomorrow, and then unless the stochastics and momentum start to roll over, then you should expect a double top. And then from there, then who knows? But we're getting long in the tooth for the seasonality for the market, and earnings reports haven't been that great. And so you have to think this is probably the end of the line. But as long as they could keep squeezing these people and keep driving the SPY or an ES ever higher, I think the new mantra now is we're going to raise rates in June again. That story, which is holding the financials up, which then holds everything else up. But if they can make it to June, then that'd be an amazing feat. And then now we had three interest rate increases, which is simply destroying the middle class. And I'm talking about those that are making less than $40,000 a year are already doomed. Those making over $140,000 a year, we'll start seeing it, but they're okay until they lose their jobs. The people between 40 and 140, between healthcare, rent, and credit card increases, and the ever increasing property tax and college tuition payments for the kids, is that they're gonna squeeze that into nothing. And you're already seeing it with the retailers. I mean, we just had more reports today of more retailers struggling. I mean, Target, Wayfair, and it's just going to get ugly. And when retailers go, nobody's filling those spaces. Rents go down. You start squeezing the commercial real estate market. All those people that had jobs, part-time jobs, that's either survival income or it was discretionary income, but it's gone. And all those jobs are being consolidated into these mega warehouses. And they're going to, where nobody wants to live. And so your kids are not going to have spending money, or you want to retire and work part-time somewhere, not going to be able to. So unless there's some sort of, fresh thinking in the Politico ranks, they're in big trouble. And I think it's going to take these local municipalities to start losing tax revenue on property tax and on sales tax before we see some changes here. But we're baked into the deflation cake. It's just now, I think, the big money just trying to squeeze what's left out of the lemon. Sad but true. So that's SPY. Okay, so we're just going to wait for this blue line crossover. We'll start selling some call spreads against it. Not sure how fast that'll be. Maybe later in the week, and we'll take it from there. IWM, small caps, heavy with financials. Here we go. Is that, it's racing up to touch the bottom of this support resistance line, and I think it'll get to here, and then we'll roll over. We're already pretty overbought as it is, and we have TWM we bought on, I think, Thursday, and now we're waiting. I bought again today, and now we're waiting to see for the rollover. Some of my subs waited, but it didn't do anything today. So the price I bought it at for TWM was pretty much the open. So I think this rolls down here. Once it starts pretty quickly, it's the weak sister, and just gonna be patient with it. I change a little bit the way I trade some of these because they're just stop hunting, and I seem to have a really good eye of finding a place where I get stopped out. So now we're scaling in and scaling out. That seemed to work really well for us last week. We had a really good week of trading. I'm going to go to GLD now. Get the XIB in a sec. So gold, it's way overbought. It's rolled over. As the signal was as of the 17th, it was saying, hey, and you can see it kind of struck down, tried to recover, and boom. But we were short. We had puts on, and we're going to roll those puts down tomorrow and roll them out. And so I expect gold to hit the 100-day moving average here over the next couple weeks. Next stop is here, and then we'll see where it goes. Seasonality is not in vogue now for gold. And then just going on to that, I'll actually do nugget because that's what we have position in. So we're short nugget too, okay, and that trade's working really well for us. And I expect nugget to fall out of bed, and I wouldn't be surprised if it got sub 8. We're in the 10s. I'll roll it down tomorrow to either 9 or 9.50 and roll it out a week as well, and just keep grinding out profit on it if I can. So XIV, I had 30 UVXY puts on, 1918 and one just directional, and so close those off, and then put on another one at 1550, and it got down to 1490 when I took it off. And I think you can see the squeeze here in XIV. I mean, when it hit that 100-day moving average, look at that, just like a bottle rocket. And so, with the VIX now under 10, under 11, is that they're running out of juice again. And this has been the bottom. And that's all it's been here. All we've been doing is playing ping pong. So we've been going from 23.30 to 23.60, and today they gapped it over. And but there's no follow through because the Fed is claiming that their balance sheet's going down, and now it's going to take outside forces to put money in again. They're trying to force the money out of the bond market again. That seems to be their fallback position. And then but people pushed back a little bit on TLT today after it broke down. The 10-year is only at 2.27, and so if they really thought happy days were here again, this thing would be at 270. So this was totally a short covering panic rally. But people are idiots. I mean, we saw this coming. Every time they have a news event, they play it up into absolute disaster for the world, and they just simply wait there and spring traps. So this time we said, the hell with that. We just stayed with the way we think they were going to play the game. Know your enemy, and we profited from it. So my advice to you is that until it doesn't work, when the more dire the news gets, the more hand wringing you hear, as it's drifting down going into a news event, play the fade. You'll be happy you did. One of these times it's not going to work, and then that's good news too, because that means they broke the spell, and it's time for a good correction to start hitting us. Let's talk oil. I know it's weird here using it this way, but I think oil bottomed today for a move higher, and so we'll know tomorrow. But I think by the end of the week we'll see oil back around 50 to 52 area, and then we'll just have to see because that'll bring it up to the VWAP, and maybe even all the way up to the 100-day moving average. And then I think it rolls over again because we're drowning in oil. But as we know, fundamentals don't matter. All it matters is how exposed you are to the short side. And if we lean too hard, that skews too hard to the short side, they're going to go in there and they're going to chase out those shorts. And my suspicion is that's what we're going to see. And then that move will die and it'll roll over again and then rinse and repeat. So I still think we're going to see, before this recession's over, we'll see oil in the 30s, if not lower. The American producers have figured it out, and we're just applying technology, and we're just sucking the straw right now. And they told us that the Bakken and the Texas shale and that whole zone, you can't make money less than $60. Well, these guys are making money at $40 now, and they're starting to bring some of these fields back to life again that were sat idle, because the horizontal drilling technology is getting that much better. And once you have a hole in there, just to suck a pipe down there and push it out a little bit more, it's not costing you $40 to get that oil out. And then you just let these babies run. And now you have a whole field that you're sucking oil in, and it extends the life of the field. And so I don't think, this thing about $60, $70 oil, notice you heard those conversations when oil was at 54, and now you're hearing that oil is in a death rattle. So now we're going to push up. So just don't be surprised if you see oil go. We're in UCO. We may add to that position. We're in at 18, and may add it on tomorrow or Wednesday if it's still kind of drifting, and then I think it'll only be like a 70-cent, 80-cent trade for our sell limit. But you're going to get a bounce in oil before this thing rolls over again. Let's see what else I want to show you. The biotech is, I'm just torn on this one. I just hear that this thing's just going to get a lift and go, and it might be the place where they try to bring this thing into a blow off. So I'm keeping my mind open on this, and but right now we're pretty overbought, so I'd love to see the stochastics noted here in the intermediate trend. I would like to see this thing reset and at a higher low than the bottom there early April, and then take a shot at it. But just keeping an eye on it for right now. And let's see if there's anything else I want to talk about. I think that's it. We're staying with the biggest, most liquid names and just trying to grind out profits there, and using the double derivatives to express our trades. And so what's been working for us pretty well for the last couple weeks. And so we're going to stay with it until they change the market rules, and then we'll adjust again. But anyways, Bob from Trade Genius, right now we're coming into the end of April, and I'll update all my performance numbers tonight. But it looks like we're going to be probably +6 to +7% for the month, and not bad for a market that's just been grinding. We got back in sync after that one bad month in February, and we're back on track. And then our XIV trades have been nothing but spectacular. So I'm gonna do some training in May again, and just show you guys how to make money every single day trading. So there's a path and there's a plan that I follow, and I'm gonna show you guys how to do it. Show you my indicator, show you how to do it, and just get you guys on the right side of the trade. Some weeks are spectacular, some weeks are flattish, but it's a really good system, and I love to share it with people who want to invest in their knowledge and their ability to make money trading. It's going to come in handy, especially when the market gets more volatile. My system becomes more profitable, and I want to share that with you guys. So anyhow, I'll catch you guys later. If you have any questions, you can put them in the comment section, and I'll be back tomorrow. Thanks. Bye.